Hello, hey everyone. Um, it's June 13th, 2026, and I wanted to do a technical analysis on NASDAQ specifically. Um, if you don't know what technical analysis is or what it entails, it's basically just analyzing the charts to help you sort of anticipate better price action so you know when to enter into a trade and when not to. A lot of people kind of wait until market opens in New York session or London session, whatever they're trading, and sometimes that gives you a very limited view on the charts. And so it's nice to do a technical analysis, or really just, it doesn't have to be technical, but really just look at the charts from a kind of a bird's eye view and kind of see what is going on for the week. Kind of gives you a setup, helps you understand what your plan is, what your game plan is, because every time you trade you should always come in with a game plan. Usually I do these like Sunday nights. And I did mine a Sunday night, but then I realized, hey, I should probably record it and share with someone who might be interested in understanding how technical analysis works. Everybody probably does theirs differently. I will always preface that. The way I do this makes sense to me, and I've been practicing it, doing it a lot more often, and so it's just become the thing that I use regularly. And yeah, so don't want to waste too much time. We'll get into the charts here. Right now, I'm on the daily. Every candle is equal to a day. While we are on Monday, July 13th, this candle has already started printing out for the 14th. It starts printing out at 1800 or 1700 Eastern time. No, 1800 Eastern time, excuse me. So even though we're still technically on Monday, because price or market closes around 4:14, 4:16 p.m. Eastern time, it gives about a 1 hour sort of break and then starts up again around 1800. That 1800 start means we're starting on the next day. So again, we are Monday, July 13th, 2026, but this, as you see at the bottom, reads as July 14th, 2026. From 1600 today until 1600 tomorrow, Tuesday, this is that 24-hour candle. So technical analysis, you use it to answer a few questions. Where has the market been? Where is the market going? Where is the market right now? And where do you see yourself putting in trades or potentially looking for entries and potential exits? Nothing ever goes perfectly planned, but it's important to have some sort of plan entering in, because that again eliminates that whole idea of gambling and just throwing money into the market and seeing what sticks. So this is how I look at trades. A few ways to look at it initially is to first look at the first. If you follow ICT, which I do, you look at the first 20 days. So, and you don't count a Sunday, and I wouldn't count this candle that's starting 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. So up to this point here, we would say that is 20 days worth of price to look at. 20 days. It's a 20-day look back. Basically, you're looking at the price to see what price is done within these last 20 days, and this will kind of help you determine where price wants to go for the next week. So just looking at this, price is in a down slope, right? We have high, lower high, lower high. So we're definitely downtrending. But again, these are daily candles. So you obviously have up and down movements in between, but the overall structure is bearish. And as people like to say, it's good to look at the overall structure on the higher time frame, which is daily, to determine what direction you want to go in when you're trading. So ideally, I'm thinking I'm going to go bearish because overall my structure is downward. Now I'm going to zoom in and look at today's price and what the previous days looked like. I trade a lot with liquidity, fair value gaps, order blocks, and right out the gate I have this block between this candle, and this bullish one. So initially, obviously, at some point we thought this would have some sort of bullish response. Unfortunately, this candle, while it opened up here, it had a downward close. It closed underneath this daily blue gap, which means price seems to want to go downward. And if price is wanting to go downward, if that's the case, and I like to keep like my eyes and my focus sort of narrowed in, because initially, like I said, we start off a little wide. We talk about what price looks like. We look at the, most recent 20 days to give a bearish sentiment. That's what it's giving us here. And then we zoom in into where price is currently and kind of give us an idea of what we can expect price to look like. So in this case, this bullish fair value gap has been invalidated by this downward close candle. So not saying that price could never go up above here, but for the overall premise to make sense, I like that this has happened, because not only do we have the bearish sentiment of lower highs and lower lows taking place, you also have a candle that's closed underneath this fair value gap, showing me again we're wanting to be bearish. Another thing that I do is I use a Fibonacci retracement tool to look for the consequent encroachment of wicks, and I use that as gaps. So I'll erase these markers and leave just the 50% to show me the halfway point. Oh, did I not do that right? Hold on, Control Z. Yeah, there we go. Right, so this is the halfway mark of this candle. So what I'm telling myself is, when I look at this tomorrow's candle that's already started forming today, I'm expecting, if I'm looking at a bearish trend and I have this fair value gap that was bullish, that was expecting to be bullish, actually become inverted into a bearish fair value gap, then I'm looking for then these candle or the next subsequent candles to potentially come down, not just down to this wick, but hopefully get underneath and close underneath it. That is another like confirmation or confluence or check off my list that says price is coming downward and it is continuing this bearish trend that I've already seen on the daily. And if price is going to be coming down, where is it coming down to? It's going to be coming down to here, and this would be the sell side. Because if price is going to come down, if that's your hypotheses or whatever you're expecting, you have to know where is it going to come down to. It has a potential to come down here, and it has a potential, and I'm going to make this dotted and white. It has a potential to come down here, and it has a potential to come down here. I'm not going to focus too much on this here because this is close enough. Okay, this is close enough, and that's all I'll focus on for this. And what else do I look for? I look for any inefficiencies, any place where I can see like a gap between two candles that don't overlap. Those are areas where I can expect price to want to come back to. So here, if I hover on here, the close on this is 937.00, and the open on this is 936. So there's no gap here, there's no gap here, there's no gap here. There is a gap here formed right now, but this candle is still forming, so I'm not too concerned about that. So that's how I kind of start off on the higher time frame, looking at the daily chart and kind of determining what I expect. I'm gonna, just for documentational purposes, I'm gonna click here and duplicate this and put it over here. Okay, now I'm gonna go down to the 15-minute bellwether curve and look at the chart. So it's the same chart I just looked at, right, where we have the 50% where I expect price to, hopefully, if it wants to be bearish, I need to see candles close underneath this and sort of aggressively to show me that price wants to go down and come down to this old high, which is a sell side liquidity, and potentially this other high, which is another sell side liquidity. I'm going to use my Fibonacci retracement tool again. I'm going to mark from here down to here. I'm going to put back up all my things that I had here. I think I have everything correct. I don't think I need this 0.2 there. Yeah. So now if price, which is right here on the 15-minute, does come down and close underneath this and happens to hit this sell side, I'm expecting it to come down here. So everything is measured. Like, I look for where I expect price to come down. And so I already marked out this old high here, and I marked out another old high here. And so I can expect price to come down here hit this sell side, I can take profit here, come down in the middle here, take profit here. And if it shows signs underneath this with like aggressive movements and long candles coming underneath, then I can expect price to come down here as well. Now this is a 15-minute. If this doesn't look like a huge profit, it is, because you have to look at the time and the size of candles. This right here would be an 800-point move, which is not what I'm expecting right now, but that's a lot of handles, so that's huge. It'd be a huge return on your trade if you were to take that trade. The next thing I do look at is I go down from the electronic trading hours to regular trading hours. What this does, it allows me to see where price had closed and opened up during regular trading hours. Now, if you're someone who trades options like Apple, Google, all those other things, you operate on a Monday through Friday, 9 to about 5 p.m. trading zone. So when 5 p.m. hits, the clock is done. You don't trade anymore. Nothing is moving. You can't trade anything. You can't enter into a long position. You can't enter into a nothing. You're stuck. You're done. For those who trade Forex and futures, by 5 o'clock, by 6 o'clock, market opens up again for futures in the Forex department. So it's the gap in time. Like, let's say this candle here for Friday, right? Because today's Monday, right? July 13th. Friday, this candle closed at 1600, roughly 15 minutes. It's not exactly. If I go down to the 1 minute, you'll see that it closed at 1616 or 1614. But for the purposes of using a 15-minute bellwether curve, we're going to look at it at here. Price closed at 1600 on Friday. And then we know that price opened up Sunday night, right? Because that's what market does for the futures and Forex people. It opens up Sunday night at 1800. But because I'm looking at this at the RTH or regular trading hours, it's not going to show us that until Monday. So Monday, 9:30 is when price opens up for regular trading hours. And the reason why we mark this is because we notice there's a gap here. And price, just like fair value gaps, order blocks, breaker blocks, Fibonacci points and or markers, or however way it's referred to, gaps are an area of attraction for price. For you to know where to place your trade, you have to know where price is going to be attracted to go to, right? That's how you catch something. Like if you're a hunter, if you're hunting whatever you're hunting, I'm not going to insert any particular creature there. Whatever you're hunting, you have to know what it looks for. What's being hunted has something that it reaches for, it searches for, it needs, it wants. When you are able to figure that out, you are able to follow and get and basically hunt that creature, if that makes sense. So in this scenario with price always goes towards gaps, fair value gaps. It goes towards order blocks. It goes towards old highs, old lows, aka like draws on liquidity. When it does things like that, you want to know where those are because you want to know the potential of where price is going to go. So gap is one thing that we look for. So not only have I marked out these sell side liquidity areas where price is likely to come to, and that long wick that we had on the daily where I marked out this consequent encroachment, I'm also marking out areas where I expect price to come and fill up. So what I do and what is taught by ICT is you'll typically, and I'll just do this for this demonstration, but this price here from Friday, where it closes, which it closes up here, that's going to be what's called as regular trading hour, open range gap, and I'll leave it like that. Then I'm going to take that same line and I'm going to duplicate it somewhere, clone, and I'm going to put it on where we actually opened up here. Okay. And right. So price closed here. And again, I know this might be basic for everybody, for most people, but just in case if you're watching this and you're still kind of new to trading, know that this is an up closing candle. My candles are different colors. This is the equivalent to a green candle if you're new to trading, where price opens up at the bottom. It goes as low as this line here, or as low as this tick is. It'll get as high as this tick, and it'll close. This is considered an up close candle. Beside it is a down close candle because it opens up, gets as high here, gets as low here, and it closes underneath. Up close candles open at the bottom, close at the top. Down close candles open at the top, close at the bottom. So this is a Friday. 1600, price closed. So this is an up candle. It opens at the bottom, closes at the top. So I put a line here for when it closes. And then down here, 9:30 this morning, this is where it opened. It opens at the top, closes at the bottom. This is a downward candle. So when I look at this range, I take a Fibonacci. And you can use like the game box if you just mark out your 50% line. But I use that and I draw that there. And I do something. Oh, I double click on here, coordinates, and I stretch this out to give me my line. I've definitely practiced this many times. I can definitely get better at this as far as being fast, but I just love this process because it takes away that whole like, I don't know. I don't know what the market wants to do. I don't know. Like this takes away that whole fear, concern, worry, because there's so many other things to focus on when you're actually in a trade. It removes all the cobwebs and gives me a clear path. Whether I make money or I don't make money, I have an actual path. And that is 50% of the struggle half the time with traders is just like, what do I do? I'm looking at a chart or a computer with bars and I don't know where price wants to go at this point. I'm guessing. This takes away the guesswork. This is where you focus. This is the analytical part of looking at a trade. This is despite whatever is going on in another country or despite what's going on with our political views or whatever is happening in the world. Looking at just the chart itself gives you a clear understanding and in a way control over your own mind. You can't control price, but you can control your thoughts and you can control how you feel toward trade. And so I believe when I use this technique on the beginning of the week, and maybe every morning when I'm just looking at the opening gap from the night before to the morning of, this makes me go, okay, I think I know what price might want to do. So going back to this, again, Friday close, Monday open, I look at this range. So price has 70% chance of filling up this gap within the first hour, 30 minutes of the market opening. So Monday has already taken place, right? It's Monday, 10:25 Eastern time. And again, we're on regular time here. So I'm going to click back to electronic. And I'm actually going to, just so we mark where we are, we don't get lost, I'm going to go back to electronic trading. Okay. So now back to electronic trading, right? We had that gap. And it was between these two lines. So I can take this off. So price closed on Friday here. It opened here, this dark blue line on Monday. And price came up. Oh, no, sorry. This is all Sunday. Excuse me. This is all during electronic time zone. So this is happening during Forex and futures, but not during regular time. Basically, by Monday at 9:30 here is when market opens up. And as you can see, the way candles are formed here, I'm going to make this blue maybe a little bit dimmer. And you see that price on 9:30 comes down a little bit into this daily fair value gap that had been invalidated. It went up. It only touched here at the 0.875, just a tick, just the wick, and then it started to tip down. It never came up and filled up this gap at all. It just continued downward. And if we're really evaluating why, one, it's a Monday, and I don't believe there was news. Yeah, no news. It was a Monday. It was no news. Typically, sometimes there's not enough volatility to take price where it needs to go. But the hope is that by tomorrow, we'll hopefully get to see a response into that gap. Because again, price is attracted to gaps. It wants to fill it up. And so it hasn't done that on the regular time. On the electronic time, it has shown that it's been in this space, which is cool and a nice indicator that at some point it is going to come in here. And we're hoping that with price coming in on Tuesday, it's going to end up filling into this gap. But as we see during the day, price opened up, came into this and just came downward, and it got as low as just right here, this little small old low, basically swing low down there. So now we're on electronic time. It's about 10:27 and Asia session is ongoing right now. So we'll look to see how London responds, if there's any manipulation that takes place in London, if it goes in a little bit, comes out. Ultimately, this is my plan for tomorrow. Tomorrow starting at 7 a.m. Tuesday, I like to put a line here from this 7 a.m. on to 9:30, I'm looking for a price to show interest in potentially, this is me printing price, going up and coming into this 50% mark here, at least during that time. During that period between 7 a.m. and 9 a.m. or 9:30 really a.m. I'm looking at pre-market. And so pre-market will have that sort of move, especially because at 8:30 we have news tomorrow. And 8:30 might give us that volume, that volatility that will end up pumping price into this gap. It could potentially fill in the entire gap. It always has the potential to do that, but I would be looking more for it to aim right here and draw a line right there. I'll make that, I thought that was white. Let's draw, oh, I must have drawn a different line. Here we go. Yeah, that's the line I'm going to be looking to aim for. 50% of this gap that we noted that was on this Monday. From Sunday to Monday, I'm expecting price at 7 a.m. between 7 and 9:30 to come in to this and fill it up. I also noticed that there were other fair value gaps here. There were other gaps here on Wednesday from last week, July 1st, that could also have the potential of getting filled that hasn't been completely filled. I think I looked back earlier and didn't see other ones take place. But ultimately, that's kind of how I plan the trade. And I just look to say, okay, 7 a.m., I expect price to come into this gap, fill it up. Yes, it has the potential to come up. Where would it come to? It can come up to these relatively equal highs, which are, if I zoom in a little bit. Yeah, this swing high, it's barely above, but it's a swing high. And this swing high, they're kind of almost close together. So price can come up here and take that out. What else could price come for? Again, it could come for this gap up here, and it could obviously come for this swing high, and it can come for this little fair value gap right here because of this nice displacement of a candle. If price doesn't want to go up and it shows me signs that it wants to actually go down after it comes into this gap, then I know I have potential for price to come into that 50% line from that wick that was drawn at the daily, and it has opportunity to come down to the sell side. This would be a take profit 1 here, and middle over here could be take profit 2 if it comes down. But if it shows good movement, strong volatile down, then this could be take profit 2 or 3. And of course you can go probably lower, but I feel like I would be okay with this area because this is what I plan for. And this is a huge significant move anyways, with the price being in this area coming down. So that's how I do technical analysis. I look to see what the potential is based off of what price has given me, what it's currently giving, and I kind of go based off of that. I hope this helps. I hope to do more of it. Please let me know if these are helpful or not. If there are certain things that I should go over that would be a lot more beneficial to your trading strategy, and I'd love to share some more. All right.